David Zervos, Jefferies chief market strategist, joins us here at Post 9. Well, that's the question after last week. If we can still have this bright future, you've been very optimistic with the way that the White House is going about the trade rebalance. What do you think?
Well, I mean, I'm optimistic about the long-run goals. I think we could all agree that having our trade in better balance and having our fiscal situation in better balance are noble and admirable goals. The speed with which you do that is the question in the market, and myself
and the
included.
How, right? Those tariff rates were surprising, the reciprocal rates.
Right. But again, that's art of the deal, put all the leverage with the president and then try to drive it back. That's the standard methodology. But again, I think the market sees chainsaws when it comes to fiscal cutting. The market sees almost a chainsaw-like approach to how he's going after trade, and they get very nervous. You can't just pull these structural these structures in the economy for decades, our fiscal largesse and our trade imbalances out without the patient kind of squealing, and that's what the patient just did. So it's speed. It's the speed with which we do it, and I think they've kind of seemed to have tempered it back a little bit, but we'll see. I mean, we'll see how the negotiations go.
It's not just the market that's concerned, though. It's CEOs, it's those who allocate capital, obviously, in the market, but it's also people who are making decisions about what to spend, how to spend it, and worried about demand going away fairly quickly in anticipation of whatever may be coming as they sit there with this uncertainty.
Well, David, if you run a company and you've got contracts with all your customers and you don't know, are they going to be affected by all of the unwind at Doge? Are they going to be affected by the trade policy reset? You're going to pull back a little bit, wait. And you also don't even know, maybe we've talked about a lot of fraud inside of the Doge thing with, all of these findings. It's still going. I think people just hang back and they say, you know what? They're doing it. That's great. That's great news. But if it affects my counterparties, I need to be careful because I don't know what customers are going to be affected. If you run a big business in and around the Washington, D.C. metropolitan area, you might have a lot more people affected than if you're in another city in the United States. So I think people are just naturally cautious. And I'm going to go back to it and say it again. I don't think I wouldn't have believed there are many rational folks out there that said it's not a good idea to reset our fiscal agenda. It's not a good idea to reset our trading agenda, international trade agenda. It's the speed with which we've done it.
No, it's not just that, David. It's the how they're doing it, too, the execution of the trade reset. I mean, the fact that those reciprocal tariffs were basically made up on the formula, the fact that they are very high, and I get it, they want to negotiate better deals, but it's hard to negotiate against those numbers when it's unclear. So they want to end trade deficits with countries like Vietnam. That doesn't make any sense, and also could plunge American companies and American economy into recession, which would negate the whole purpose of trying to invest in manufacturing in the U.S.
So there's no science in the economics of international trade. Anybody that gets on the show or gets on Twitter or gets on or X and says, this is the formula, this is what we should use. Nobody knows. There's no formulas in economics. It's an art. It's not a science. And the art was, let's come up with something that sort of represents how fair or unfair the current agreements and the current structure might be, and probably go bigger. And then the announcement is go bigger. And that's where they went big. But that is, I think, classic Trump style. So, again, I'm not that surprised how big it was, and I'm a little surprised at how much the market got nervous about his traditional negotiating style. But, again, I just go back to
But it's the weeks and months that may go by before we really see whether things are negotiated down to a level that you may anticipate that are going to keep executives, for example, sitting on their hands, not making decisions or worrying about a slowdown in demand. And that can become a self-fulfilling prophecy pretty easily.
It can, and there's no doubt that in this game theory approach that we've been working with our clients to try to better understand this, that you can go to a very uncooperative outcome because you go too aggressive with everybody and they rebel and they do things to go and just kind of cut off their nose to spite their face because they just feel jilted, they feel upset. So, yes, there's a lot of risks with David. There's a lot of risk. The trade policy, to me, is the much riskier policy maneuver than the fiscal or any of the other policies.
That's what the market is telling you.
And the market saw that. But, again, I don't know. I guess I just feel like it's par for the course with how this administration and this president has operated.
Well, that might
So
be,
it's-
although by all